Morning, good morning. How's everyone doing? This on the road.
Hello.
Hello, hello. Can you hear me, Henny?
Yep. Sound good.
What's going on, guys? We will get this show started here in the next 5 minutes. You need to go to the bathroom, drink, do what you need to do. Hope everyone has had a great week.
Probably.
Good morning, good morning, good morning.
How's FinTwit's favorite Karen? Hello, boy.
You're an idiot. What's going on, buddy? You just became Twitter's biggest troll out of nowhere, huh?
Nah, bro, I'm just messing.
No, I love it. I love it. Someone's got to do it. Good morning, Axel, Emmanuel, George, Jamal. Alright, I'm going to mispronounce your name, but I remember you. Mr. Russell. I'm going to say Mr. Russell until I can understand your name. It's going to be hard. Kivare. Got you. Alright, thank you.
Good, bro. Appreciate you letting me in, man.
Yeah, not a problem. Not a problem. There were a couple more people that I was going through DMs and didn't quite catch, so I went ahead and added them in. So there'll be some new faces. TLS, it's definitely an acronym for something, but good morning. Dad, what's going on? Good morning. Victor, how are you? Yeah, we will, basically, we let first 5 minutes go through, people hop in. Don't feel as if you have to stay the entire time. You can come in and out. Obviously, these are recorded too, so you can always come back, review what you missed. It's a very casual call. We really just kind of go over the news this week. Me and Henry both give our takes on, ES and the DXY, and anything else that you might want us to go over. We usually go over a weekly profile. If we take trades that week, we'll go over our trades. Sometimes there's videos, sometimes it's just screenshots. We answer questions. You guys can send us questions throughout the weeks in the email thread, or if you reach out. It's usually easier for us to see them if you just send it in the email thread, but if you send it to us on Twitter or whatever the case is, we usually jot those down and we'll go over them as well. And then we usually pick one ICT concept to kind of go over. We've done a lot. I don't know, this is like it feels like our 16th, 17th, 18th week doing this. So we've obviously covered a lot of them. So we've done a lot, and we will kind of continue to just do the same ones, obviously, because there's not an infinite amount. There's only X amount we can cover. But then also sometimes, if there's nothing that really sticks to my head, for example, this week, I know I didn't put an exact like concept to follow this week. I wanted to necessarily kind of have you guys interact a little bit more. I know we've got a couple questions from some students that we'll go over. I say students, but traders. You guys aren't students to me. I'm not. It's not a teacher-student setting. It's just a peer-to-peer setting. But I basically said how to properly plan and execute your models. I think that that's a very crucial part of your trading. So how do you not only how do you plan it, but how do you execute it, and then how do you execute it consistently over and over and over and over and over again until your time ends, right? It's just being consistent, it's game of consistency. So if there is any specific concepts that you do want to kind of get into depth, just let me know. If you are on this and you're new, you know, I like to tell people all the time, the only stupid question is the one that's not asked. So don't feel like you are behind. We've got people on the calls that are very experienced. We've got people on the calls that are brand new, right? So you've got a little bit of everything at your fingertips. So don't feel as if you need to hold back on anything. For the most part, we can go ahead and get started though. Let me make sure I say hi to everyone else before I get started. Amar, Axel, Braylon, Kate. I think it's Kate. It's either Kate or Kat, but I think it's Kate. Emmanuel, George. It's Luck. Leslie. Pablo. Okay, yeah, we're good. I think I got everyone for now. So people will continue to hop in. It's very rainy in Ocala, Florida today. I am from Ocala, Florida, Central Florida. It's very, very rainy. It's been rainy all weekend, all week. So hopefully you have better weather where you are. For the most part, this past week, pretty crazy, hectic week. We were expecting a lot of, a higher range, whether it's daily, weekly volatility. We had CPIs, PPIs, FOMC. We had all that stuff going on, crazy beat last week. We'll get into that on the charts. This week, not as crazy, but still very good week to trade. No news Monday, no news Tuesday. 10 a.m. Powell's testifying. So be careful there. That's a tentative lingering news. It's not like a CPI where the second at 10 a.m. when that news releases, you see an instant redelivery in price. It's a very lagging, tentative. Sorry if you hear people behind me. I've got people downstairs, but hold on one second. Sorry about that. This is very tentative, so within like an hour or 2 hours, it kind of plays itself out for the most part. On Thursday, 4 a.m. member speaking, 8:30 unemployment claims, 10 a.m. Powell testifying again. So back-to-back days, Wednesday and Thursday at 10, you got Powell testifying. So utilize not necessarily the exploiting of just 10 a.m. Utilize kind of like 9 to 11. Use that whole session because that's really going to bring the entire volatility throughout the entire session. It's pretty tentative. It's not just like a one and done in 5 to 15 minutes. For the most part, it's pretty tentative. You have existing home sales, and then on Friday at 9:45, you have flash manufacturing PMIs and flash services PMIs. So second half of the week, pretty heavy. First half of the week, pretty light. When we get into the charts, we can talk about where and how that might correlate. Do we have any questions on the news? Okay. All right, so we will get into it. I usually do dollar and Henry does ES, but if you want us to go over them individually, feel free to ask. We can. We're pretty even keel on both of our charts with the way we look at stuff. So, hold on. Okay, so a couple things that we're looking at. We've got a set of sell side liquidity down here, and we've got a set of buy side liquidity right here. I was thinking we were going to potentially find a low. I was expecting dollar to go lower. I wasn't expecting dollar to go this lower. So areas where I was right, areas where I was wrong. Both of these have an intermediate break in liquidity right here. You can see how this is relative equal highs, but this wick goes just a little bit higher. And that provides it to basically gather the liquidity here and still go lower. Same thing here. relative equal lows, but this one has a break in liquidity. This one's a tad bit lower. It gives it the near-term efficiency to then kind of relieve and go higher. One thing that I am noting though is, in between this range, right, this low to this high, we've taken all of basically the first set of internal liquidity, at least below discount. That's something that I'm kind of watching. We basically just now took out that weekly low. Obviously, if we are going to attack these weekly lows, that means we're attacking sell side. I'm not set that we're going to continue to go lower. We're pretty still even keel in the range, so it's hard for me to decide with both of these having somewhat of a breaker in liquidity right here. So it's, there's nothing on the weekly that's really eyeing me too hard, besides the fact of if you really wanted to look to see, we've got a BISI right here, right? We've kind of tapped into it once, tapped into it twice, right? And so it's hard for me to say how sensitive we'll be to this because of tapped into it once, twice, 3 times, right? It's already been used. So and price isn't as sensitive to it. So part of me does see price potentially drawing through this, but I don't want to. It's a very soft bias, right? I'm kind of, if anything, I'm neutral on the dollar right now because there's really nothing on the weekly. There's nothing too much, that shows me with conviction that it's going to go one way or the other. From here too, you have a SIBI, right? Price just kind of broke back through that. So if price does decide to pull up during the week, how sensitive are we when we pull up into there, right? Do we pull up into there and do we go lower and start to attack obviously these lows? Or do we pull up into here and go higher, right? It depends. Really, it requires a little bit more data, but it's something that you can't get frustrated at because it's just you need more information. You have to know as a trader when you have enough information to make a solid conviction on something or when you don't. And for me, right now, I thought last week, really, my headspace was we could potentially pull down into this breaker, and we have, right? Fair enough, and we're here. So it's still viable to go lower. You had inefficiency right here. You had inefficiency right here. You had an inefficiency right here. You might see price potentially open up, throw a wick down in here to fill this. Look at the volume imbalance, right? So this is an area that, even though you do have candle body closure, you only have candle body closure offered for the upside, right? You offered closure through the gap for buy side, but now you need sell side offered. So maybe get some form of weird small down closure into here and then potentially see. That's when I would immediately be trying to look to see if we can get a rise going higher. And then let's say, obviously we've got a fair value gap in here. This would be kind of the first thing I would be watching throughout the week to see when we do get back into here, right? How do we play, right? If we come down into here, and then we basically pull back up into here, are we sensitive to it? And do we come back down through, right? In this case scenario, I would be looking to potentially see if that occurs and we're coming back down, we could potentially start taking these lows. I'd be a little bit more bearish, start to have a little bit more conviction. If we make a low in here, come up in here, and you see price respect it, and as we start to take whatever low we make down in here, that's going to give me the kind of tip of my hat of, okay, yeah, and that's fine. I don't have to be bearish up here, right? I don't have to be bearish up here. I mean, that's kind of, it doesn't mean anything. Like, I can still be bearish right here, from here to here, and have conviction towards it, and get what I need throughout the week, right? maybe start to anticipate it up here. And when I start to see it, that's where I, go to ES, see what ES is doing, and then, catch a portion of this move, which would be a buy in ES. Catch this entire portion right here, right? I don't need, and I think we were talking about it last week. I don't need this. I don't need this, even though this was this was very. You can foreshadow this stuff, and you can kind of anticipate it during the weeks, but it definitely was not. This weekly candle was a little bit over exaggerated as to what I wanted. I actually kind of wanted this. So if you were on the call last week, just delete this stuff for a second. This is actually what I was kind of anticipating. I wanted this, and then I wanted to go higher, right? Didn't get that. Perfectly fine. I was overall up in the week too. I was able to, because here's the thing. Even though we're anticipating that, or I was anticipating that, I don't want to say we, even though I'm anticipating that, I'm still bullish on ES. And so even then, it doesn't matter whether I'm right or wrong on potentially seeing this low form. Because if I'm still bullish on ES, and it doesn't give me any reason or rhyme to even think that we're bearish, which it never really did this week, and we'll go into that because I know we have a question from a student that was talking about Thursday's price action. But this is me just pondering a possibility, right? I still have to go with what we've been doing all these weeks is still just been bullish on ES. It's not that I immediately am changing everything and I'm only looking for sells. No, if you look on ES, there was one or two sell opportunities this week for very short-term stuff, but for the bigger plays of the week, where was the direction, right? Higher. Where's the direction been for the past 2 months? Higher. And so even though as a trader I can sit here and I can start to maybe see things potentially fold, that doesn't necessarily equate to, well, if this was giving us this low on top of ES showing us a very clear high, then that's a different story. But ES never really gave that indication that there was a full high in. So you just have to know that, I think I talked about it maybe 2 weeks ago, about knowing when to put weight on the DXY and when to kind of just, if the ES looks clear in something, just kind of trust that DXY is probably going to do the opposite. Now we're obviously not as much in a mixed market, right? There was an area in here where ES was going higher, so was dollar. Finds a turn point, and now it's going lower, and ES is still going higher, which is good. You're now starting to play in that anti-correlated market, which it means it's a trending market. So if it's a trending market and we're still trending higher, there's nothing that's changed. Even though I believe in the future something will change, we will find a high, that's just a belief. There's nothing that's tied to that. It's just a belief in what I think, what my gut feeling is as a trader. But I'm not going to take that to the markets during the week until I know, until it's clear. So this is kind of what I wanted. Obviously, if you basically can tell, we did not do that. We were kind of a little bit more heavy-ended, which is fine. It's just, if you look in this range, right, we haven't broken out of this range in a while. We have not gone below this low. I've not gone above this high. Volume imbalance still, I still am eyeing up here, but ES is not going to really show us anything too crazy. It showed us a little bit this week. There was some sell side liquidity that was finally taken out. But I'll have Henry touch that with you guys. We also have a volume imbalance up here, so it's just, I wouldn't get too crazy on sells just because of this candle. We could very well turtle soup under this low, but for the most part, it's kind of where I stand on dollar. If you were to sit here and utilize, obviously, going into this past week, when you're going into these weeks, you want to start to get the most, like, what's near you, right? You've got previous days highs, previous days lows. And I know we were talking about this candle. I was talking about the consequent encroachment of it last week. I don't think I even mentioned the low of it, but that's something that would be really useful. You know, just even the past 1, 2, 3, 4, 5 candles, like just utilizing their lows, utilizing all that stuff. And I think also just the threshold of this candle, up closure, to view it as a potential bearish order block would have been something that you could have, you know, started to see. Obviously, when you go in here, you play one out, right? Price plays into it. Now you're just, as a student, just watching to see how price plays. Can we break through it? Do we get closure through it with regards to the daily time frame? No. And you turn around. Now, with that being said, you kind of need to start obviously considering whatever the case is, right? Do we draw into here? Obviously. Could we be aiming for this swing point? And this is where, as a trader, you could start to now potentially look for buys on ES, right? You could start to build something, some form of narrative, and see if potentially, you know, you could start to draw into here. To me, it was more so going into this week, I was just looking to see if we could draw into this down closure candle, right? You had down closure with displacement right here. This was an area where I wanted price to draw. I just wanted it to draw down in there and then be sensitive and go higher, and it drew through it. So it's 50-50 game on whether or not I was right or wrong there. Don't really care. I was able to make money in the market this week. And that's where you get that draw. And then you get a follow through that's a lot deeper, which to me, I think we're aiming here. Whether or not we make a low there, I'm not sure. I kind of have to go with this near term order flow and say that for now, I could just see price potentially coming into here. And I personally would want it to turn around, go back up. You know, you would want price to fill this. And here we are. So that's my take on dollar. If anyone has any questions, let me know. Watch where we potentially can fill. Sorry about that. So yeah, watch this area. See if price pulls up into it. And if you go lower, I would say also one thing that'll, to me, this is kind of the rule of thumb that I'm taking with me during this week is if we get daily closure above this, I'll start to be bearish or bullish again. Excuse me. I'll start to be bullish again. If we can get daily closure above this right here, I'll then feel confident price going higher. Until then, I'm gonna remain bearish. Right? That's how I'm playing my neutrality, not a word. And I know Nick, if he's in there, he's just laughing his ass off because I mispronounced neutral. But I'm neutral in the market, so I have to have a scenario for each side, right? So my scenario for being bearish is as long as price respects and stays sensitive with regards to daily closure. In this SIBI, we'll go lower, potentially attack sell side. If price does now find a way to get back above it, I think we'll attack buy side. Because everything's already balanced in here, right? There's no imbalance in here. The only imbalance is this. Everything else besides this is balanced. This is balanced. This is balanced. This is balanced. Everything else, and there's nothing else in here to balance besides this. So how price plays in here with regards to closure, I would want to see price close above it. Start using this as an order block and this as a breaker. And then go higher. If not, we should respect this and not get back outside of this breaker. And what price would potentially do is just consolidate orders in here and then go lower. Something to think about. Any questions, comments, concerns before I give to Henry?
I'll just note on the slide too, posting if you go to the weekly chart and look at the breaker from back in August of 2022. It's right there,
Oh, you're talking about this, yeah.
and you'll see in
Are you talking about this candle?
February, yep. And look at the responsiveness at the low, the last time we came up with it.
Yeah, and we had talked about that honestly a couple calls ago. Like a couple calls, but a couple calls ago too. I haven't mentioned it in a while. I think it kind of slipped my mind too, but
Yeah, we were referencing in February and March because of how it traded, right? To just
yeah,
about constant function or mean threshold, excuse me, and then
yeah.
so
Yeah, so when you look at
set up pretty nicely.
yeah. When you look at it this way, it's definitely because it kind of yeah. I mean, and we also I remember talked about this too, which it was a stretch a while ago, and I mean it's still kind of a stretch, but you got these relative equal lows down in here.
Yeah. What's the? Oh, let's see what the.
Even here on a monthly, when you pull this BISI out, we've got these relative equal lows sitting right above the consequent encroachment. I'm trying to think, like, what scares me though is you're kind of getting an area like this in here, where it looks like price is doing this, or price is coming off of some form of array, like in here. You come in, you get a low, you get a high, you get a lower low. Come in here and you get like almost a higher high, but you don't. And then you come down in here, and it looks. This is like one of my least favorite things about dollar. And then it comes in here, and there's nothing in this pattern that's going to show you that price is going to go higher, right? There's no breakage structure. There's nothing. Price is coming off of some form of higher time frame premium array, and then all of a sudden it does this, like in here. It comes all the way down into here, and it goes lower, or it goes higher, right? It did it in here, and it's kind of looking to do that in here. But I agree with Henry. I think that the way you look at it on a weekly and even on a monthly following the breaker and where this liquidity is, it seems as if it's a lot more low-hanging fruit for the sell side than it is the buy side. But just something to think about.
If you're looking at a weekly chart too, then we see from March of 2023, that dropped down to sell side, which I think did just, it just barely purged the sell side diamond. So that would be like your parent price swing from that high down to the low, from March down to the April low.
Yeah.
And then on this recent run up, we've failed to reach back above the high, which would look more better than traded up into that last outpost candle from February of 2020, or outpost candle in February 2023. That tapped into the breaker. That happened there. The output to the left with the highest body. Yeah. If you take the mean threshold of that, then no candles close above there. Okay. The order flow on the weekly chart looks pretty bearish to me. I would think there is a possibility of trading a little bit higher looking at the daily chart, but because now we're like in that. If you look at the daily chart, then you can see a shift in market structure, and we're returning into that optimal trade entry.
Yeah. Because I also now that we're kind of viewing it like this, I would even start to use this candle right? Where does that look? Where does that show daily?
Yeah. It's
Yeah,
like a proportion.
that makes sense. So I mean, and that's something that I'll kind of look at too, where that would give you an instance where even if this is where what I just said a little bit, always could get me wrong, because even if you do get closure above this, say you do close above it, come down in here, and then you're gonna hit that weekly order block, and you'll basically have this whole area to make a high from because of that weekly order block, and that means threshold, and then price could literally just go down if it wanted to.
Yeah. We're in that optimal trade entry now if you look at the most recent price swing from the lows to the highs. But I would just look to see what happens now in premium raise and what yeah, if you look at that, you can just return up into a short-term premium and then drop.
Yeah.
Above equilibrium. But I'm on the same page as you. I'd just be looking at this point to see what happened in the BISI below. Are we closing through it? Are we trading up to the CIVI above and then closing through it, or respecting it and trading more?
Yeah, I agree. That weekly definitely paints a pretty big bearish picture. I think the CIVI will hold because of the mitigation block on May 15th. May 15th? You're looking at this guy. Could. Definitely could. I mean, we could be kind of heavy-ended. Also, just think about news this week, right? So think about what happens on Monday and Tuesday, and then all of the news that's on Wednesday through Friday. So think about that. Think about where we are going into Wednesday, having no news, and then figuring out, okay, where's the weekly candle on Wednesday, knowing that we had no news, and then from there, the rest of the week we have news, right? Are we creating a wick on the weekly, this, that, and the other? But Henry, I'll go ahead and give it to you for ES. Sorry about that. I had to sneeze. Well, I know. It's not on. Now it is.
All right, let's see. I just saw your message. I like that. All right. Okay, weekly chart here on ES. Last week, these were the levels we were watching in this city here, and looking at both bounce right here. So we have this high, which we traded through it. And then we were looking at this city here. You can see this one was low and this one was high. So we're marking the consequent approachment of that. And then we're also marking the consequent approachment between this candle's low and this candle's high. So we're looking at the city here. This has been partially filled, but there's a piece that is remaining to be filled. And so we're in that area. And marking the midpoint. This area, so that gives us 44.28 and 44.41. And then looking forward, if the dollar is going to drop lower, and the US will trade higher, they're inversely correlated. And maybe look into this liquidity void up here. See there a space in here which does not have any trading. It's not like a volume imbalance where this touches right up into there. There's actually a separation. So this candle this handle went lower and then closed here. And then it opened here, traded up and back lower, which means between this close and this open, there was no trading that took place inside there. So we have the liquidity right there. Pull that out, and we can see it's been partially traded into here. So I'll note that, and I'll also note the same not traded to there. And then the constant picture as well. So if ES does continue to move higher, this is what we do looking at the targets. The low here, 44 and 99 and then the constant approach rate, and then this area here, looking into that. What's below us now? So traded about this price range. We look at this. This is way outside that 60-day range at this point, but you can look at this as a mitigation idea if we trade back into that. But I would just be watching the previous retry and see what I can get in this range here. Nothing about this looks bearish at this point. So we need to see some sort of closure below this candle and a breaking structure level to really start looking at. And if we go down to the daily chart, can't really see anything back here, but you're not this higher time frame levels. You see on Monday here, we have a nice expansion. Tuesday and Wednesday, we see continued expansion, a bit of consolidation. And then here, we trade down to this volume balance. And higher after that, and then Thursday, we back lower. And then into this wick. And then back up to the high. As this target had not been met yet, it's close, but nothing. So the high here was 44.39. We were looking for 41, which we trade to on Thursday. And then we still have this target, which is yet to be met. And what was left behind, we've got this irregular separation between these two candles, and then volume balance down here. We do trade back into that. Now, I want to comment on the third. I think that's pretty much it. You know, as in this, we can go into the lower time frames and then we have a question about Thursday's price action. But here now I'll just be looking to see that like respond in this busy. And then looking at these levels as well to see if we have some sort of inversion there. And then I wouldn't really turn bearish on this at all until I would need to see it close below this busy here before I start to get curious about bearish ideas. Otherwise, I'm just looking for these weekly targets. Any questions there?
Did you want to go over the email question?
Yeah,
I can read it to you if you want.
sure. Yeah.
All right, I'll read it to you. Okay, so one of the questions we got on our email thread this week was basically, she said, my question for this week, how would you trade Thursday's expansion? I didn't trade Thursday, but I did peek at it. Two things. A, how to change bias. What are the signals that showed that it was totally bullish? And two, how to chase it. Where's a safe strategy to spot and chase it? I think ICT says you can use a $250 stop loss to take a trade that doesn't pull back. Have a wonderful weekend and thank you. So a couple things there. You never want to. I know that you're not really talking about chasing it, but you don't really want to chase anything, right? You want to have something that comes to you, even if it is I think that it starts with the first part of your question. How do you change your bias, or how do you have that bias leading up to it? What signals can you find? But then from there, what to look for in price that will allow it to come to you to then obviously execute inside of it. And obviously the $250 stop loss is relative. It could be $25, it could be $2,500, it could be $250. But yeah, it's a lot harder when you have this type of week where there was not a previous day low that was taken out. There was not a whole lot of pullbacks, at least for the start of the week. And you kind of started, by the middle of the week, you were already somewhat overextended. So it's very easy to get that idea that potentially price could come and fill and retrace and stuff like that. And so when you get in areas of the market where it doesn't, it is a lot harder to play. But Henry, if you wanted to touch on that, going into Thursday, what signals could you have looked for to potentially get you in the mindset of potentially being a buyer, and then what areas in the market could you have potentially looked for, waited for, and allowed the market to come to you to therefore then safely execute into a trade?
So it is tougher when you don't have any retracements to take sell side of previous day's lows. But on Monday, we had a pretty heavy expansion and left this 50 behind right here, which was traded into on Tuesday and then again on Wednesday. And note how responsible it is here, not even reaching to constant encroachment, and look where the candle values are opening and closing. This was on a news release. This was on a news. Yeah, that was up on Instagram. So that's a 4 hour chart. Go down into on the 4 hours as well. Look at constant encroachment in this look. And see how we're trading into it, but look at the candle value closure. Is above constant encroachment. So as I'm watching price trade, I'm looking at every single PDM and not just looking for does price trade to it, but how does it trade to it? How far into it does it go? And then where do the candle values open and close as well? So here we're trading out into constant encroachment on Thursday morning and not even closing them. Then go into the 1 hour. Here, this is the 1 hour open. So daily open. Take this down in 1 hour. So we're looking at constant encroachment here. I find it better to look at the lower time frames for when you're looking at wicks, not necessarily the lowest, but if you find on the 4 hour huge wick and then look on the 1 hour, you can find it a little bit. So we have the constant encroachment here. Trade down into that below the 8:30 open. And keep in mind we still have this higher time frame target and here that have yet to be met. And you see the responsiveness out of this 50. So to me, at this point, we're using all of these discount areas, not even trading in constant encroachment. We're trading to it, but not even closing it. And then this candle trades into it and closes well above it. All of these are showing me that there's a clear respect for these discount areas. Zero and discount too for the equilibrium. Here there's the below equilibrium. Trading up below into the discount area and then responding there on the south of it. And you see the pinnacle there. So to me, we have a clear respect for discount areas, not even trading to constant encroachment. We still have a higher time frame target that has yet to be met. And so now we can look for a bullish idea to form, and we can look for it to form here which is around that 8:30 open, and then we'll also go into the 15-minute, and we can see what happens in the lower time frame here. So we have this downward closure now into the spacing, and we can look at that is the constant encroachment of that 1 hour wick, which is aligned with what this last down first candle here. Work that out. Let's show that. We're trading below the midnight open, below the 8:30 open, with a bullish idea in mind. We're still bullish on the week, right? So even if you think that price could potentially trade lower, it's a good idea to go into the week and remain through the week until your higher time frame target is hit, with the intention to trade with the weekly bias, right? You can take those scalps short here and there when you have a bullish weekly bias, but trading it in line with that higher time frame bias is going to give you the most high probability setups. So here we have the midnight open, trade below it, trade below the 8:30 open, down into last down first candle right here, make the responsiveness and candle closure right there. Here we're open, hitting the very low is just exactly the constant encroachment of the 1 hour wick right there, and then trading that high. Here we have a low, high, a lower low into our point of interest, and then it trades back through the high. So here's bullish breaker in 15-minute. And now we have this model occurring here with high side here, 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 and a 41 target up here above these highs. And then still looking for this high as well. So now on the 5-minute, what do we get into? Oh, on into this one. One thing that's happening here as well is there's two. Turn around, you can see it. The programs right here. 5. So here's London. There's also trading below London. And so you can see if we're trading below London, most of the time we're looking for a continuation of what happens in the London session. But here, since we have a bullish bias, we're trading below London into a point of interest with higher time frame bias. We can instead look for and it's Thursday. We can have that Thursday reversal profile. So trading below London and then reversing to take out the highs again. We'll go back out in 5 minutes. And feel free to drop any questions in the chat if you're curious about what we're talking about. Then here's that 15-minute breaker. So we trade below the low, like a high, above the 8:30 open. And then consolidate in the breaker. Also this right here. So that can be your entry right there. So consolidating in the breaker with higher targets, higher time frame bullish bias, shifting market structure. I trade below this low into the point of interest. And pay attention to the time this is occurring as well. Right? This is in New York and so this is where we're looking for the model to form in time in here. You trade above, consolidate in the breaker, trade into the VISI. This can be your buy right here off the 5 minute. You can put your stop on maybe 8:30 open. If you're looking into the one minute, even earlier buy, if you're being a little bit aggressive, you can anticipate this. You have that low buy, go through it. Here's your 15 minute over here. And looking at this on a 1 minute, you look at this as a breaking idea, and there's a little bit right here, just as we trade and close by that 8:30 open price. We're going to get series of down posting this here. We're trading right back into this PC. That can be your buy right there. And then you could pyramid inside of this breaker, here, inside this PC. And then we get to the 9:30 open. Straight into this PC. And these down customers. Let's have low, high, lower, low. You have your breaker idea, you have your order block idea, you have your value back here. This is the 2022 one as well. Right? As we purge sell side, shifted architecture at 5, and then return into fair value gap. So that can be your buy right there. Right at the open.
I think that was the cleanest buy of the week right there. That one for me, I didn't get to play it. I was busy at my job on Thursday, but that right there probably would have been, I think, the best buy with regards to the time in which you were receiving the handles that you would receive.
Yeah, that was really cool. So we have this opportunity here. Any candle in here can be a buy if we're inside accumulating in the breaker. Here you can be a participant in this business. Here you can be a participant. And then we start to trade away pretty quickly. Right? So this is probably what you're talking about in terms of being concerned about chasing price, because this is running off very quickly. But we have that higher time frame objective, and price is still below the midnight open. So it depends on what your model is and you know how you want to trade it. But if you don't get this guy down here, then you could be a buyer inside here, because this is all just trading efficient price action. So trading up here, trading through it, rebalancing, trading down, rebalancing here, immediate rebalance. So this kind of style, this kind of trades into it, this candle trades into this kind of side, and then into it, and then we use where the liquidity right there, which is the breaker. Yeah. Trades back up through the midnight open. And at this point, I wouldn't really want to be a buyer in anywhere in here now that we're back above the midnight open. So at this point, I would want to wait for some sort of intraday retracement to come back on sell side and then trade back higher. So you can see what happens after price trades the opening. On the hourly chart, and now we've met the 40-41 objective, right? But we can still look for this objective up here, as long as we're continuing to see bullish sides, respect for our discount areas, and then trading out. So on the hourly chart, we have this right here. What time does it trade into it? That 1 p.m. candle, which is where we can expect to see a Judas swing. Right? So we're trading down into the BISI, through the swing, and then we back high. So you can wait until after lunch and look at the PM session and see on a day where we're having a large expansion, we can look for the expansion where we continued in the PM session. So we're looking at the lunch hour, and then we want to see the lunch hour traded below as we do swing, and then we can participate in here for the second night. Here on the 15-minute, you can see down here on the 15-minute run, trading into this is so you could look to be a buyer inside of 45, and we'll go down to each of these on the lower time frames. But here you have that 1 p.m. blue swing trading below sell side of the lunch hour into constant encroachment of the 1 hour VISI. It's also inside 15-minute VISI right here, which is already traded to the low and back out. So it's rebalanced price range. Notice how the candle bodies close right at constant encroachment there, and then trade back higher. So now, internal sell side has been purged, and you can look for that continuation. So now you just have to find your model within here. For me, it would be this. Sell side's purged, reach into the 15-minute and hourly VISI, trade back higher, and what's left behind is VISI right here. So now, I can evaluate right here. I'm also looking at these candles, and look at what time this is occurring. 1 p.m. through the swing, trades back up to here, then 1:30, small 1:30 through the swing, down into this VISI. You can be a buyer right here if you stop under the mean threshold of this series, which is just under the scale. You can buy in here, and if we're talking about a 5-handle risk, you can be a buyer right there at around, let's just say you don't get constant encroachment. So we'll use just the low risk area, which would be 54.5, and then the risk would be 51. So only 3-handle risk, and then you can participate in this side.
Where would your target be? Someone in the
My target would be ultimately up here, which isn't reached, but I would use projections for this. So I would take this swing here, which I'm trading off of. This is that placement from this high down to this low. So I'm taking the low there, a high here, and then I'm projecting out that range. So I would look to be taking partials at half and one standard deviation. So there you have 10 handles or 15 handles already from your entry up to 1 standard deviation. And then if you look at 2.5 up here, that's the high there.
That 2.5 is nasty.
Yeah. So I would just be using, since we don't have any targets in here until here, I would just be using projection investment targets. We take that low to that high, and then to swing with full content. So we swing that, and then we can look at this range. And then we're standing duplicate of that. And so we take a partial here, and then we took partial at 2 and 2.5 as well. So it depends how much of a position you have, how you want to take partials, but it also depends on your objectives, right, too, right? You may just be looking for 5 handles or 10 handles, and so you just take that when you get it. You don't have to have this whole thing to call a successful trade. You just need to find your entry with reasonable risk, and then reach for whatever you're targeting. Let's see what other entries we could actually find. That was pretty clean on the 5 minute. If you're looking at the 1 minute, this would be a bit more of an aggressive entry, but we trade down into here, trade back about here. This is a more aggressive entry because on the higher time frame, which is parent, at 15 minute and the 5 minute, this would be your parent placement. So your shifting market structure would really be above this high. And so you can use this as your shifting market structure for this, which we used for the 5 minute, but it's a bit more aggressive. So a shift over this time and then looking for a retracement into something is a more high quality trade, while this is a more aggressive trade. We have the same idea right here. See? So low, high, lower, low, into the point of interest. We have the 1 p.m. future swing, trade back about this high, tap into this. You can be a buyer right there. At 50, I put my stop on the low for that trade. And then you'd be looking for the same targets. You get that buy on the 1 minute here as well inside the 5 minute issue, and also inside this inversion area. Right to the constant third trick, and then trade high up here. And then you get right here as well. Maybe figure out a 2 minute. Okay. So here we have that parent price swing on the 15 minute. This is the highest high down to the low. Then we have a shifting market structure through here. And then we wait for a retracement to a fair value gap, which would be right here. This is also your PM session silver bullet. Because now we're between two, we are right here. And here. So between these hours, we're looking for, we need to know where it's going. And then we're just looking for a return into a fair value gap where we can get at least 10 handles and we look for 5. So you can be a buyer in this fair value gap with your stop under this low, allowing for a return into this one. And then you look for the 5 minute cover above this high, and you can look for your higher targets as well. So the silver bullet, the fair value gap for the silver bullet does not have to be created in this time frame. It just needs to trade in one during that time frame. So it could be created in there, or it could be from earlier and then just trades into it. So on the 2 minute, you get that entry right there. Then it's on 5 minute as well. And then the step. I'd say those are your cleanest opportunities in the PM. If you look at this one from a little bit earlier, this 15 minute here. Just remove this to remove the confusion. This 15 minute here. Oh, question in chat. So I guess we need to check different time frames for, is SB structured break? I'm not sure what that means. Oh, silver bullet. Yeah. Yeah. I would look at it from the 5 minute down to the 1 minute and just pan through, go from 5 to 4 to 3 to 2 to 1, and just see where you see on those time frames where you see the first fair value gap form before or form during, and then trade it into that. So you're gonna want to scan through each of those time frames and see where you're getting it from. And most of the time you can get it on 5 to 1. If you don't have it on the 1 minute, then it's always forming. So it would just be on the seconds chart. But I don't know if you want to trade on that. It depends on the person. I don't really trade off the seconds chart. Sometimes 15 seconds, but that's rare. Here on the 15 minute, we tap into this right here at 10:30. So potentially putting in a 10:30 swing there. We can also look for our silver bullet between 10 and 11. Oops. So here on the 15 minute, we're running below internal sell side into higher time frame point of interest, which is the 15 minute VISI. Note how we just tap into the high and immediately run away from it. So that's I'm seeing that happen, and I'm looking at that as a very bullish sign. It's not even trading down the constant encouragement, and it's not even closing inside VISI. That's very bullish. Immediately trades higher and back above this line. So we can look at side purge and then shifting structure. Go down to 1 minute. And there you go. Very small inefficiency left behind, and that's your back right there. So this is a 2022 model and a silver bullet setup as well. And it's within that window. So yeah, sell side's purge. Should respect this higher time frame. This kind of way, trade back up, shift market structure, read this high, and then return into there like that. So you can get that entry right there. 3 minute chart, it's a little bit cleaner. You can see that you see right there. Last down first candle right here. Trade right into it. Give me a buyer right here. You stop and then slow. And then get the 5 candles, here's the candles. Okay. Around 2 minute. Have that very small. You see right there. It's just one tick. Let's have volume balance right there that you can utilize if you have to trade volume balances. Same here. 1 minute. And then you get to 11. So you want to find your entry between 10 and 11. So here I'll be waiting for sell side to be purged into the higher time frame point of interest with response to the bumper there. Rates higher, shift market structure, and then return into third area. Or volume balance, or the down question. I will do your entry in here. Stop here. And you look for this side. And you can use your projections again. So look for higher targets. So there we get one standard deviation, 55.5. So we're buying right here around 35. And then with one standard deviation, you can get 20 candles right there. with just about 5 minutes risk. So that's a nice trade if we sell do it after here. Remember, you don't need to even catch that whole thing. You can just get your 5 minutes or 10 minutes after here, and then you're out of the trade. So I hope that can answer. I would just say that if you get a huge run occurring like this, it's a good idea to wait for at least some lower time frame internal sell side to be purged, trade into a higher time frame pulling interest, like even just a 5 or a 15 minute missing, and then wait to see what the response there is. And you can see your 2022 now sell side purge, shift to market structure above on it, and then you'll find it out. And focus on these key times that we're looking at. So your silver bullet between 10 and 11, silver bullet in the PM between 2 and 3, and then we can also look for around that 1 and 1:30 mark for the lunch lows to be traded for, and then for continuation. So here, within this, we have multiple 2022 models at key times. Here, here, and then this would define a second bullet up to that prediction. Silver bullet is market maker buy or sell model as specific area. I guess you could see it as a market maker buy or sell model. Not necessarily, because the silver bullet doesn't have to be a 2022 number. It could just be expansion and a return into a fair value down, and then continuation. But you could, if you're looking at these things on the micro level, you could see a buy model within this. Your original consolidation, and then distribution, redistribution, and then here, holding up accumulation that took place here at the last time post Canada, and then reaccumulation, and then distribution through the top. And then we just return into this area where we could buy and find something there. So, I mean, if you're really aggressive, you can participate in here. If you're looking at this on 15-second chart, I bet you would find a fair value that you can find right here. And this is also trading into last anchors. So you could be a buyer right here potentially for this time. It just depends on how aggressively you want to be. Questions?
That was great. That was great, Henny.
Thank you.
Hopefully you guys got some insight on that. A lot of stuff covered there. A lot of different entries. I only traded Tuesday this week post CPI. I wanted to trade more, but I got busy at my job, and I didn't have the best day on Tuesday. It was more of a management thing than anything. I was profitable on the week. I was able to get profit, but when I show you guys my executions, I see I wasn't quick to go back into the market. My management, I think, is just a little bit more impatient right now. I'm getting a little bit used to having that increased risk. I told you guys, I think last week or the week before, I tend to increase my risk in the months of June and July, and September and October. And I think I'm just getting accustomed to it. I think, Henry is the GOAT for sure. Henry the GOAT for real. But I think I'm just getting used to it. It is, no matter what you say, when you increase your risk, you got to figure out how to, it's different when you do it once a month rather than once every week. So I think I'm just getting accustomed to it, and I'll show you guys my executions. But I was hesitant to get back into the rest of the week. I wasn't as I didn't have the full focus that I needed trading during my job. And the good thing about trading with increased risk was even if I do have days where it's just, I get a little bit, well, because my risk is increased, my little bit is actually a little bit bigger than a little bit. But do you guys wait a certain amount of minutes to trade after big news like CPI or FOMC? Yeah, for me, I can answer my piece, and then Henry can answer what he likes to do. Anywhere from 30 minutes to an hour and 30 minutes out following CPI. You'll never see me get in before CPI. And then FOMC, I really like the 3 o'clock to 4 o'clock window following FOMC. And I think that since FOMC is a little tentative, it's just letting it release at 2, letting the whole 2 to 3. It's not to say that there isn't trades in between 2 and 3, but I like to me, the path of least resistance is usually 3 to 4 o'clock. Henry, I don't know how you feel about that.
Yeah, I'm on the same page. I like that final hour on FOMC days because those can be pretty wild. It wasn't this last week's FOMC was pretty relatively clean, I thought, but the one before that, I think it was pretty wild. Like sell side was taken, and then buy side was taken, and then sell side was taken again. So it's easy to get caught on the wrong side of things. But yeah, so you can destroy exactly. So waiting for that last hour can be good on FOMC. On NFP and CPI, I normally wait about a half hour. Yeah.
Yep.
You want to look at your trade, Carson?
Yeah, I can. I'll pull it up. All right. So a couple things here. This was on Tuesday. You can see there's a lot going on here. But and I can go into the chart too, but I'll kind of walk you guys through a little bit of this. Can you guys see the screen? You good? Can you see the screen? Okay. All right. So first trade, obviously, I'm buying down in here. I take partials right here. Okay. And then I'm still playing higher pricing. So I take one partial, but then it comes down, and you can see it stops me out right here, right? In profit, right? Still winning trade. From here to here, great. Comes back, my stop is in profit, stops me out. No problem. I'm a little bit early to get back in, and you can see I buy in here and I buy in here. And you can see that actually ends up, I add again, and then it takes me out down in here. So basically this gave up this, right? Was profitable, come down, not profitable. I had a wider stop because these entries were not as big as my initial entries either way. That's why my stop is a lot wider. But you can see even there, I'm still buying as it's down closing. I'm expecting, there was an inefficiency right below this low in here, and I'll talk about it when I go to the chart. And I was playing it under the inefficiency, and it just wasn't having it. But it overstretched the inefficiency, but kept candle closure inside of it. So that's when you see me get in again. So I basically gave up my initial win to this down closure in here, and then from there, I see the respect of the candle bodies following the gap in here. So I'm buying back in here after I see these candle closures with my stop at this low. And then as I see that expansion in here, I'm using this volume imbalance to see how we basically are playing, and I can see us respecting it down in here. So I buy again. I take it all the way up here. I take partials. You can see my partials right here, right? Partialing out at the high. Still expecting higher pricing. I moved my stop at these lows right here. Probably could have moved it up here but I still felt price could, there's a volume imbalance. There was still stuff going on that I was only safe having it at the low for me at least. And as you can see, it gets stopped out, but still getting stopped out at, I'm getting stopped out anywhere from 5 to 10 handles, right? So it's okay. This was, 20 something handles. Still stopped on profit perfectly fine. And then I play again, potentially utilizing this up closure as a breaker. You can see how we took out the low, and then we start getting above this high, and I'm buying all within this candle right here, all within this down closure. My stop was in here. I think I put it, no, I actually put it right here, because I saw that obviously there's inefficiency. Price comes in, fills it, got close to my stop loss, but did it. Comes all the way up, and I actually was playing everything at the high. Was playing all of these at the high, but I obviously had stuff at break even, so I was fine. I broke even, but you can see, got a little too greedy there. Tried playing, this is why I was even saying last week, internal liquidity is key. I could have played the internal liquidity and played just even the rejection block, right? Could have played all in this wick and had this be a great trade. But because I chose to try to just play the high, I had a break-even trade. And that was my entire trading of the week. After this, I kind of forced myself to not trade, because it's not the typical character in me. And this type of stuff is really behavior that you see when you start to increase your risk, right? The numbers get bigger, all this stuff. And I felt confident in this getting hit, but because of the increased risk, I had to have obviously stops where they needed to be. And I wasn't really happy with myself after this trade. Now, obviously, granted, like, I'm profitable on the day, right? I still am break even. I didn't lose any money. I didn't even lose any money on the trade that I was angry with myself at. But I was flustered with myself, and that caused me to have to step away from the charts, because I know that it's just an easy fix. There's a lot of things that are, I could have even taken a partial here at this high. I could have taken a partial in this inefficiency. I could have taken a partial at the start of the rejection block, at the equilibrium, or I'm at consequent encroachment, mean threshold of the rejection block. Anything but the high, and I would have got a lot better of a day. But that's greed. And I am human, and I'm imperfect, and I make mistakes, but I have to know exactly how to I have to know how to make the mistakes responsibly. So you can see I'm out at break even. Technically a little bit of profit because these are averaged down a little bit lower, but it's a lot when you have to think about it. It's not, you can't just keep going, right? And I think that's where I wanted to get into my next kind of the topic of planning and executing, right? Planning and executing, planning and executing. Planning doesn't always equate to executing. And even planning and execution doesn't necessarily equate to success, right? You can plan and plan and plan and plan and plan, but if you plan and you never execute, you're never going to get a result. And if you plan and execute, you're going to get a result that doesn't necessarily mean it's the result you want. And I think when you're dealing with you as a person, you have to know what you're more susceptible to and what you're least susceptible to. And see things when they are there, right? If you're a trader, and I'll even be straight up, every single one of these entries right here, 1, 2, 3, 4, all 4 entries, there were 100 lots. 100 lots, right? It's a big lot. Depending on your broker and your leverage, yeah, but these were all 100 lots. I was emotional about this last run. Now, this is a run I've seen happen time and time and time again. And I guarantee you, Henry can even say the same thing. 9 out of 10 times, he sees, and I've seen, this high get taken. Right? I was comfortable. Even though I was comfortable, that doesn't necessarily mean it was the right decision. I wanted the high. But because of the higher risk and the increased risk, there's parts of me that slip in and say, even though it sounds greedy, but it's not even really that greedy. It's just something I've seen time and time again. But it doesn't defeat the purpose that the fundamentals of a trade, of taking partials and doing all of these things, they have to play in every scenario, right? There was areas to take partials. There was areas to pay myself better than I potentially could, rather than just getting knocked out at break even. And I'm not going to sit up and I like, that's the thing, is you guys will see me come up here, you know, weeks and I'll have no trades. There will be weeks where I have great trades, and there's weeks where I have sloppy trades. This is, to me, this is sloppy trading for me, for what I believe I am as a caliber of trader. This is sloppy. This is pretty sloppy trading. It wasn't even a losing day. It wasn't even a break-even day. You can still see where I'm well profitable. But when you add in this behavior in here, when you add in this behavior in here, it takes away from what could have been a lot better day, right? And I'm not going to sit up here and I'm not going to, you know, be someone I'm not. I'll be the first to show you these. And that's why even sometimes these pictures help more than the videos, because this gives this shows you the behavior in the trader executing, right? Even right here, I could have just stopped just with this trade, right? Perfectly fine trade. Was a little over 10 handles. Perfectly great trade. Could have stopped. I kept trading though, and I'm okay with continuing to trade. And then obviously when I trade again, I had a sloppy trade. I recovered it, right? Perfectly fine, still above. But this is what frustrated me, because I could have played it a lot better, and it was just simple greed, right? How do you get rid of greed? You have to be aware of it, right? You have to be aware of it. That's really the only way you get rid of it, is the awareness of it. If you're not aware of it, greed is something you can very turn your head towards. You can turn your heads towards greed very easily. And if you do that, it will continue to pop up. The more aware you are of it, the more subconscious your mind will be when that pops up again, right? I'm gonna have a trade like this again with 100 lots. Like, I trade like depending on where my stop loss is, my lot size is anywhere from 50 to 100 lots per arrow you see, and that's just the leverage basically. Obviously, it doesn't mean that, you know, it's the same thing as, you know, 10 contracts or whatever the case is. I don't know the exact math on it, but there'll be an instance where I do this again. I won't shy away from it. There was no problem in the entry. It gave me profit. I just was greedy enough. I was too greedy to take partials in certain areas where I could have. And with 100 lots, I can tell you right now, even taking partials at this high would have been more than enough. But at what point can you have a conversation with yourself during the trade and be sober enough to the fact of, is it enough? Because at the time being, for Carson, that wasn't enough. And I just made a mistake. But notice how, out of all of the mistakes in here, out of all of the sloppiness in here, still a profitable day. There was nothing. The day, what? That's why when you get experience as a trader, you can get yourself out of holes, but you also have to know when to pull back, right? At what point? If I would have lost this trade right here, if I would have gone in on these entries and it would have went below this low, probably would have been done for the day, because I already had given back what I had originally made, and then I would have put myself in loss. And at that point, I'm chasing. Does anyone have any questions about this before I go and kind of walk through what I was kind of looking at on the chart on Tuesday?
You have a question in the chat.
Mm-hmm. Oh, I can't even see my chat. Hold on. Okay. But aren't we supposed to be happy with our wins and not be so hard on ourselves? You said it yourself. You had a plan with a good stop, and then sometimes it goes past side, basically nothing wrong. Yes. I think also though, we as individuals, when you go through your journey and you get comfortable at a certain level with trading, you have to hold yourself to a standard. And I think the reason I got to the point where I am with my trading is because I always wanted to go and beat the next opponent. And then that next opponent was me. I'm always the opponent, but there's levels of myself that I have to beat. And that's handling greed with bigger numbers, bigger dollars, right? And I totally agree. You can see I'm not down in the dumps about it. I didn't sit there with my head down or anything like that. I'm just aware of it, right? Because I know myself as a trader. I hold myself to a higher caliber than that. And so it's just recognizing it, being aware of it, and understanding that there's a solution to it, right? There's an easy fix. It's an easy fix. And I think you can learn a lot from stuff like this because I'm not going to cry about it. I'm not going to freak out. I'm not going to go into a tailspin. I'm not going to continue to trade. At this point, I knew I needed to step away. Right? That's fine. I can go and gather my thoughts. I can put it in my journal. I can talk about it. I can make it as apparent and as aware as I can of what all went on. But overall, yeah, I made money. And I even made money more on this sloppy day than some of my 2 week paychecks back in some of the jobs I used to work, right? So that is also something that you have to keep in mind. Even a day like this still is enough. And I knew that, and I was able to walk away from it. But it's something that you want to also, yes, you're right, 9 times out of 10 it goes past highs. That's why don't be hesitant to execute again, right? I'm not gonna hesitate on that entry again. Or I mean, I didn't even hesitate on it. Like I won't. That's something I'm not gonna hesitate on. And I think it's just understanding when this happens. Take the partial here, take the partial here, take the partial here, and then leave just a little bit, as I usually always do, for the highs. But yeah, it's definitely something that you can learn. Not enough credit is given to the ability to go through that and step down. I had the same type of week as Carson, with the difference that I realized I overtraded when I had closed and lost. I was more annoyed with myself than the actual outcome of the trades because I let myself slip. My belief is that these are the types of things you grow out of as time goes on, and exposure with experience and train your subconscious to avoid these. Yes, it's just a time thing. Or at the very least, mitigate them more efficiently. The only solution is consistent work on the matter at hand. 100%. 100%. He who has a why can bear anyhow. That was my quote of the week. And it's just time. It's time on the charts. It's time with yourself. You know, odds are if anything is to be learned from this, is to take partial, right? Glass half full and find the positive on the trade. Yep. The best thing you can take from it. That's kind of what I took from it, right? And you still have, as you go through your trading career, even when you get to be successful, you're still going to have areas like this until you really, really get mature. And I'm not even fully mature yet. As mature as I am as a trader, you know, I remember one call we were talking about market maturity. As mature as I am as a trader, I still have immaturity, right? There's still sides of me that I haven't even seen yet, right? Because even these big 100 lots, imagine if they were 1,000 lots, right? Like there's always a bigger opponent at hand, and that's you dealing with more amounts of money. which opens up a side of you that you've never seen before. You don't know what's to come. You can say this, that, the other, but until that's there and you see it, whether it's a win or a loss in X amount of time, or in X amount of time, 15 minutes, 1 hour, 2 hours, 5 minutes, and you see that, and loss or win, following the result, that person right there, using those lot sizes, using X lot size, getting or losing X amount of money in X amount of times, that person following all of that is that next opponent. Right? How do you handle it? How do you behave? How do you have composure? What's your composure like? Anything else here before I go into trading view and just kind of walk you through Tuesday's price action as to what I was potentially looking at? All good there. Hopefully you guys got some insight in here. They all won't be pretty, but also not here to be pretty. Just here to show you guys my life as a trader and the things that I kind of endure. Some of them are sweet, some of them are sour. But even the sour, like you said, there's ways to mitigate. Okay, I will go into trading view. Oops, wrong button. Okay, so this is post CPI. Obviously, you can see CPIs in here, right? Just straight whiplash. If you're looking at this, going into CPI, things I was looking at on lower time frames, we had sell side, and we had buy side. All right, both taken. Pretty easy. Was not, obviously in this, but odds are you should expect both sides of the most near-term liquidity to be rated. If not, it'll just continue to re-deliver higher. You have obviously this in here. And this is where, for the most part, and I'm going to have to actually click back and see. So for the most part, 930 hits. This is where I'm really kind of, that first entry is. So I'll use some arrows in here. Obviously, I know that I'm not. So this was where my first entry kind of was in here on a 1 minute. I'm going to start on a 5 minute and I can break it down, but it's a lot easier for me to just follow on a 5 minute. So obviously first entry was in here. You can see that everything's kind of been as it needed to be. First entry was down in here, and I believe my stop loss was, below the 50% of this wick in here. It was somewhere in here, probably. And take profit was at the high. Perfectly fine, right? Nothing bad about this. Perfect, easy trade. Where it got me was where I started buying again was in here when price started coming into here, right? I wasn't expecting this. I was expecting this low to hold. So I actually, as I'm buying in here, all the way down in this down closure candle, I'm kind of viewing this order block and I'm kind of utilizing that. But a couple things I could have done better is I still used this same stop loss, which isn't smart because this stop loss was correlated to this entry. And when I had started buying in here, I used the same stop loss, right? I used the same stop loss. That's where I got stopped out in here, but then I bought again. Right? Going on the 1 minute. You go in on the 1 minute, you can clearly see this is kind of what I was looking at. So even though this had stopped me out, obviously as I see the respect here, we go higher, and then I'm able to buy again, and that's where you see me take it up into here. I take those buys up into here, right? And then this stops me out in here, right? Obviously, there's lows in here, kind of following it. Obviously, this could have still been failed. It's up to you as a trader as to you want to know, or as if you want to decide whether or not stop was too tight, could have been lowered, or could have been higher and gotten stopped out. That's you as a trader. It's just your preference. So I got stopped out in here, and then this is where I was playing that last trade, right? I wanted, and what's funny is this was the high that I was playing, right? But I'm not trading ESU. I'm trading US 500 on that top firm account. So I'm trading US 500. US 500 did not take out the high, right? That's another reason why I was upset with myself. If you guys were wondering, this is where I was buying into. I was buying into here, all into here. All this down closure was where I was buying. Stop loss was right here. And this was the trade that I was basically playing. Now, because I was trading while I was at work, and yes, I'm doing all of this stuff, and it is not the way you should do it. You should have full focus when you trade. I've got other stuff up. I've got emails up. I've got whatever the case is, and I'm not fully focused. It's another reason why I didn't trade the rest of the week. I wasn't fully focused. So I didn't have enough awareness at the time to sit there and note that, hey, price took out this high on ESU, but it did not take out the high on US 500. Usually in that case, if I see that, and I, even though this didn't give me enough time either way to kind of react towards it, it just slipped and came and took some sell side. I could have maybe, manually closed, right? I could have manually closed even up here. So that's a lot of stuff where it's just little tiny sloppy errors, but it doesn't also defeat the fact of where did I get stopped out? Right here. So even alongside all that stuff, there's still fundamentals that have to always be there, right? There's no excuse to take a loss there either. I didn't take a loss. Took a very, very small win. There's no excuse to take a loss there, right? If your stop is not moved to at least break even, that's the only thing that covered my ass, right? That's just something that you should always keep in the back of your head too. Especially when it gets, there's a time and place to move things to break even, and it's definitely time to move it at break even, especially when you're getting up into here. And especially when you have increased risk. But this was a pretty easy model to see. Obviously, if you were watching the candle bodies, everything played towards it. Candle bodies respected it. Breaker. You've got a low, a high, a low. You take out the high. There is displacement in here. You can use this too. And another thing that I usually don't do, if you notice the time and you followed me for long enough, I don't trade lunch. I was trading lunch. Why was I trading lunch? Well, one, the setup was there. I see the model. And also, usually during lunch, you run, it usually can run liquidity, right? That 11 o'clock, 10 o'clock high, whatever you make in New York, that New York high, New York AM high, usually potentially can get ran, as it did, right? This trade would have been beautiful if I actually was able to get the exit. And that brings me to my next thing, where I saw something on Twitter, and it said, what is easier, entries or exits? And I'll ask you guys what you guys think is easier, entries or exits. And then I'll give you my opinion. Someone in the chat, tell me what's easier, entries or exits? And you said entries are easier. Entries, right? Yep, yep. Pretty easy consensus. Entries are a lot easier. Because it's a lot easier to press that buy button or just press that buy or sell button. So much easier to just click that button and get in to feel something. But once you start to feel something, it's a lot harder to set that take profit or close that trade, whether it's loss or profit, just because you're in the middle of feeling something, right? And so that's why I try to people, and it's funny because when you're new to your journey, if you can remember, what did you put more thought into? Entries or exits, right? Even as a beginner and as you're going through this journey, you are always probably constantly thinking about the entry. But they're easier. Why would you not focus on what's harder? It's the exits that really get you. I didn't have this entry is not pretty or by any means. It's not a it's just a valid good entry. Where I got my ass handed to me was not being on par with exit. So from me and my trade reviews this week, if there's one thing to take away is not only partials always pay, but maybe take some time and focus a little bit more on your exit strategy, right? Plan and execute. Plan and execute exits. You can plan and execute entries all day, every day, and get really good at it. Great. Plan and execute entries, but then plan and execute exits. Yes, Ismail.
Hey Carson, so question for you, even if you didn't take partial when ESU took the highs, right? Because I always got the trail your stop to 3 PD arrays to fail, because as you always said, when Michael said, if 3 PD arrays fail, you're fucked.
Yep.
Looking back at it, where would you trail your stop? Let's say if it's trading by the highs, what 3 PD arrays in this small price run you're looking at?
That's a
In
great
hindsight,
question.
of course.
Yeah, no, that's a great question, and I think that's a really really good question. So, assuming a lot of my average entries were in here, let me just grab an arrow again. So assuming my entries are all in here, as price was delivering into here, I would say for me, 3 PD arrays by the time it got to the high, you're looking at a volume imbalance in here, this down close candle, and this BISI. There's a small BISI in here. So really, in reality, since it was kind of such a spooled move, I would kind of need my stop loss to be trailed like right here. And really, I got taken out right here. So I mean, you're looking at a difference of only two pips. I mean, not 2 pips, two handles. But I mean, you could be. The thing is usually when I'm on my game and price is really like up here, I'm usually just not even factoring in that stuff. As it's that close to my terminus, I just jam it. I jam it. I'm literally just jamming it up into here as price is ticking, and I'm basically waiting for each one. Like once it gets up here, each 1 minute candle that ticks, I'm literally just gonna move my. Once it closes, I'm just gonna move my stop to the low. I'm just gonna keep moving my stop at the low, and then from there, either something like this where I would have moved my stop right below the down closure, and it would have taken me out. That's fine, right? That's a lot better. That's an extra 2 more handles. So that's almost like a 5 handle difference, which is pretty decent, especially when you're trading with size. Set take profit, set stop loss, and walk away. Yes and no. That just depends on you as a trader. Because I cannot set a take profit and a stop loss and walk away. Because if I would have done that, if I would have done that, I wouldn't have gotten my take profit would have been about a tick away, tick or two away, and it would have came all the way down and hit my stop loss and stop loss and loss, right? That's something that you don't want, right? If I were to set because my stop loss was right here, somewhere in here. Hold on a second, guys. Yes, as long as you're moving your stop loss to break even at some point, and that's up to you. And how you manage your price action following is there's a couple ways, right? You could start as it gets closer and closer after taking your partial or two, and it's approaching your terminus. You could jam it, or you could do what we were just talking about with Ismail and say, where are those prices nearest 3P to raise? Where can I place that? Because odds are if it fails, you're fucked. And in this case you are, but also notice how quick this fails, right? Just cuts through. I think it cuts through all three just in this 1 minute candle. There's not a whole lot of area for reactionary time, but it's not always like that either. But yeah, those are my trades for the day. That's a great question. How you, like a hot knife through butter. As a trader, you'll figure out different scenarios. It kind of depends on where the market is and what that scenario is. But, you're never going to get in trouble paying yourself, taking partials, right? You'll never get in trouble. So, although it wasn't the cleanest stuff for me this week, I will be back in it this week. I will be back in it this week, and yeah, you're right. You're right, trade management is probably the most important part of the entire game, and not only trade management but self-management, right? Because sometimes, and I think I've talked about this, sometimes you're not even managing the trade, you're managing yourself. And you have to know yourself a lot. You have to know, your pros and your cons. And a lot of people don't talk about trade management, right? They want to show you the best entry and the best exit. But how did they manage that? What was the walkthrough between it, right? And to say that you'll have, think about it. Every single day you wake up, you're going to feel different, right? It's a different feeling every day. Sometimes we wake up, we feel groggy, we feel sloppy, we feel slow. Sometimes we wake up and we're just on, right? You're just on. So you have to play that into effect too. I think for me at least on Tuesday, I felt I had my insides were feeling good, but I also was on the outside. I was dealing with some stuff at work, kind of busy, working on some stuff. I had some stuff that I had to finish by the end of the day, stuff like that. So there was a clash between, if I was just sitting here right now, the way I was feeling on Tuesday, probably would have had a perfectly fine trade. It's all hindsight though. It's all hindsight 2020. But focus is key too. You just got to be focused, because if you're not fully focused, your trade management starts to slip, and you get days like I just showed you. Yeah, that's really about it for the most part on my side of trading. I'll try to get not only some executions for you guys this week, but I put myself in the position, and I'm going to go to my office on Sunday to make sure that I'm pretty caught up and ahead for the entire week. So not only will you guys see, I'll share executions with y'all. Hopefully try to get y'all a video or two this week too. I know you guys like the videos of the trade management, and that's really good. It definitely, I like them too, just when I have the time and focus. Aside from that, yeah, just, planning. Planning doesn't equate to executing, and planning and executing doesn't always equate to the success you want. One thing I found, my literal day job is a planner, right? I plan production for for a manufacturing plant. And what I found is you can plan as hard as you want, as best as you can, and nothing ever, it does not always go according to plan, right? So it's how do you adapt and how do you react when you have this set plan that you've done so much back testing and research on and blah 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 blah. Well, what do you do when it doesn't go to plan? Because there's going to be days where it doesn't go according to plan. Do you mayday and jump ship, or do you have troubleshoots? Right. The biggest thing, the reason I'm good at my job is because when something does not go according to plan, I have A, B, and C troubleshooting scenarios that I can potentially do, right? So I think a lot of it is not only the plan, and yes, the execution, both the entries and the exits and the management, but what's your troubleshooting look like, right? What happens when the plan doesn't work, right? Have a plan for that, right? You gotta plan, and then when the plan doesn't work, what's your plan? Maybe it's no execution. Like that's something that you should think about. Hey Carson, what are the coping mechanisms you use to keep your emotions in check during tough trading conditions? One, he who has a why can bear anyhow. Two, this sounds very dramatic, but you're gonna die. You're gonna die. All this shit doesn't matter. You ain't gonna bring anything with it. Nothing. You're not gonna bring any of it with you. One day you're gonna close your eyes and your eyes will not open again. So nothing really matters. And if nothing really matters, you get to choose what matters. And you should choose wisely. So next time you're all down in the dumps about a bad trading day, go ahead and open up a daily chart on any chart and look at how many daily candles there are, how many opportunities there are, and you're letting one of those daily candles take you down. It's not efficient. It's not sustainable. You keep going. It's not how you get knocked down, it's how you get back up. Stronger than you were when you got knocked down. But yeah, honestly, the biggest coping mechanism I have is none of this shit matters. I'm not the best trader. You're not the best trader. None of us in here are the best traders. I don't even know if there is. There is no best trader. It's literally just yourself. The best traders are the people who know themselves the best. So you just have to know yourself. And the more you know yourself, the more you can keep your emotions in check. I recommend spending time alone too. Because no matter who you are, the person I am in front of you guys, unfortunately, no matter how hard I try to be transparent and the person I am, it's not the person I am when I'm alone in my room. I think you guys can all say the same too. It's impossible for you to be the same person you are alone rather than you are. It's not that, we all put on masks. Not everyone is, trying to be someone they're not. It's just human nature, right? And I think when you're alone, you tend to have conversations with yourself that you wouldn't necessarily have when you're around other people. So I would say a bit of forced solitude is good. It's healthy. Take an hour in your room and just close your door, put on some music if you want, or silence. Just kind of hang out in your room. Don't be on your phone. Don't even read a book. Just 1 hour of forced solitude by yourself. You get a lot more questions that start to pop up in your head, maybe some solutions. But for the most part, that's me on trade reviews. Like I said, the biggest thing is when you guys are going in and you're trying to plan your model, whatever the case is, you know, plan entries, plan management, plan exits, but then plan for failure, right? When it fails, what do you do? Hitty, you got anything? What's you looking like? I know I just kind of went on a little bit of a rant.
I've got,
Oh.
I think I have a couple. Executions.
And I think one of the things too, guys, is like, don't expect, like, have realistic expectations, but when you even fall short of the realistic expectations, like, that shouldn't affect you. Like, it should just mean, okay, I need to work harder. There's things that I need to correct. Let's keep going. Like, you want to have these kind of areas where you're kind of meeting certain goals, but then also when you fall short of them, you just keep going. I've been trading for 6 years. The first 3 years, I don't even think, like, if you look at the first 3 years of my trading career, it's astonishing. Like, what I thought were big goals at the time were just like little tiny steps. And sometimes you have to, Michael says it all the time, this game is a game where it's 1 step forward, 2 steps back. The second you unlock something, and I remember dealing with Henry a couple months ago, and I can tell it's changed and kind of helped his trading. The second he started really seeing things in the charts, he saw everything. And him seeing everything, and I did the same thing about 1.5 years ago. When I started to actually see everything, I wanted to mark everything. And when you mark everything, your judgment then gets clouded and skewed. Because now you're just seeing everything, and you don't have, there's not one, even though you see everything, that's good, there's not any specific weight tied to any of them, so you don't know how to handle the weight behind certain things. And some of those things that you might see are more important, and the behavior inside of them are more important than the other things that you might have listed. And so when you have everything marked out, you can get clouded and you can miss certain things. But when you know what to actually label and mark, even though you might see everything, you're not marking everything. And when you can go in and you kind of can use your best judgment after, you know, seeing things time and time and time again, okay, I only need to mark X, Y, and Z. Even though I see A through Z, I only need to mark X, Y, and Z. And I need to understand the behavior there. And then I can use judgment into understanding the narrative behind where the next draw and liquidity is, stuff like that. And then when Henry did that, he came back to me and he started talking to me about how it's night and day, right? It's night and day where you want to mark. First off, you have to see them, right? And I think that's the first thing is you have to go and you have to see them. But when you do see them, I promise you study, you put yourself under your nose, under the charts enough. You have to be obsessed. You have to be unbalanced with this stuff. Don't listen to someone that says balance is good. No, you go unbalanced. You get unbalanced. You get obsessed. You have an unhealthy relationship with the charts. Then you start to understand it. Then you balance. That's really the only way you get really good at this stuff. Honestly, I guarantee you you can ask Henry too, there's points of his trading career where he had an unhealthy relationship with trading. It was unbalanced. That's okay. That's how you become great. And then once you get great, then you get balanced, then you help others. Henry, I'm just ranting. You can go. I gotta go to the bathroom really quick. But you can add on to that. If anyone wants to add on to that, I just have to go to the bathroom really quick. I'll be back, but I'll be right back.
Okay. I have a couple. from Monday. Just first. Yeah. This was on RTY. So this was just that 9:30. You should just swing late. Right. Oh, make sure. Okay. 9:30 runs down. Or just outside. Trades back above. The buy side here. Relative equal highs. Returns down into a BISI here and here on the 2-minute. You can see right there, 2-minute one, and also the current new week opening gap. So I'm buying in there. Stop is just under the low of the candle that created the 2-minute BISI and under the new week opening gap. And then I'm just looking for these highs. And then there was higher buy side, which was an option to hold for, but I just took the 2-to-1 or so. This was on Monday, so just getting started and taking partials above this high, and then on each new high. Then I had one on NASDAQ, and then I'll show this one down first. These are all in the same day. This one on the down, buy side was already purged, which kind of gave more reason to not take this trade, but I was seeing this as hesitance to continue lower, and the other indices were setting up to trade higher, so I thought that would do the same. Here, this trade displacement back above, left this place behind, and I was buying here, with a stop here, and I take my stop right there. And then you can see that it is used as an inversion fair value. Yep. Trades up and do it here and here, and then back down to take out these lows down here. And then last was on, oops, I just closed it out on accident. Anyway, here it is on NASDAQ. Let me get the other one real quick. There. Yeah, here's the executions for it. Let me go into the chart. This first buy, this is the solar bullet between 10 and 11. So all of these relative equal highs are still up here. Sell side is purged down here. And then again right here. Shift in market structure above this high. The BISI is left behind between 10 and 11. Solar bullet. So I'm buying there. Stop loss down here. And I'm selling above here. Then if you look at the implied dealing range, so we take this low and I'm expecting this high to trade. If you draw it out, you'll find your equilibrium right around here. So as price returns back into there, I still have a piece of my position left. So I'm pyramiding in here now with my stop below this low. And then selling that up into here and through this high right there. I didn't go for the buy side, just taking internal. And partial out right there. And then we have this drop down to 11. Trade back up. Purge these equal lows that were trailed from the morning. And back up here. So you have low, high, lower, low. On a different time frame, you could see this as a breaker. I use this SIBI right here as an inversion SIBI. So we trade and close above it here. Back down to the low. It's not really optimal, but it trades back to the low and then right back above. So I go ahead and take my buy in there with the stop just under this candle here, and then take my first partial quickly through this high, and then the next one to the buy side. So just simple trades. It's really just using a 2022 model essentially with fair value apps or inversion fair value apps and looking for low-hanging fruit. And of course, at specific times, right? Between 10 and 11, it's your silver bullet. And I believe this one was as well. Yeah, so this was silver bullet idea on Dow as well. But the thing with trading that is you have to know where it's going. And I was wrong about where it was going here. So after that trades back below, then you have this inversion idea. Trades back into there, and you can be seller right here, looking for these lows, and that's between 10 and 11. So you can look for those lows and then the current move that you get. Any questions on those? That's it for me.
Alrighty, well, if you guys have any other questions, comments, concerns, let me know. I am doing a Twitter space tomorrow. Just wanted to. There's no rhyme or reason behind it. If you guys can see, share. So yeah, I'm doing a Twitter space. I titled it "Be Harder Than Your Circumstances," because you should. This is kind of the topic, honestly. Just a little motivation. You know, I'll let people talk. You know, it's not gonna just be me. I want people to talk. I haven't really been on Twitter a whole lot, so I'll just kind of, you know, open it up and, you know, for an hour or 2 hours, just kind of speak my mind. If anyone else wants to speak their mind, you know, I'll talk a little bit about some of the circumstances that I had to be harder than coming into this, and some of the circumstances that I still have to be harder than, you know, to get to the next level, right? You know, you don't want to get comfortable. You know, you do some certain things and you get to a certain level and then you get comfortable and you need to find a harder opponent to face. And, you know, it's just, there's a whole bunch of things that I could talk about all day. I mean, you guys kind of listen to me do a little rant. You know, I'll spend an hour or two, chat it up with some people, might talk a little bit about charts. But for the most part, really just gonna just talk about all of the circumstances, tiny and big, that I had to go through. You know, whether it was, you know, lost relationships, lost money, you know, lost, you know, just loss in general, right? Loss of time, right? It's just to get to a certain point in this stuff, you have to lose a lot of things, not just money, friends, girlfriends, sometimes wives, time, jobs, you know, a lot of stuff. I didn't have that normal college life like all my friends did. I didn't join fraternities. I didn't do any of that stuff. I didn't have the option for the most part. And so really the only thing that I did, the only thing that I spent time on for the most part, did I have fun? Yeah, I had a couple fun, you know, things here and there, but for the most part, I was in front of these charts, figuring this stuff out, trying to figure out, you know, what causes these things to tick and where they were going to go next. And it was, you know, there's certain individuals on Twitter, and I'm very precautious about Twitter nowadays, just because there's just so many individuals, and I don't even like giving mental capital to them, and I'm not going to point anyone out, but you know, they've got stuff in their bios that says, you know, I can help you become profitable in a year. And I have came down to the realization that they can't. And here's why. Anyone who thinks that they say, I can help you be profitable in X amount of whatever that time is, they're wrong. They're just telling you something that you want to hear in order for them to draw to you. Because they don't know how you feel when you lose. They don't know how you feel when you win. You see, we handle all of these outcomes in trading differently. Some people get it quicker than others. Some people take a lot longer than others. And some of that is obviously effort oriented, going in and watching charts and watching content and all this stuff. But then there's a whole other side of it that people don't really think about. It's how do you feel when you win? How do you feel when you lose? And how is your composure following the two? No one can teach you that. I don't know what you feel like. I don't know what thoughts pop up in your head. I don't know what vendettas you have or who you're trying to prove in all of this. I don't know what your following actions after results are going to be. And I came down to the conclusion that to a point, I can't help you. I can sit here and I can be as transparent about my life and my journey as I can, and you can be a spectator to it and take things yes and no, watch and do whatever you can, but I can't help you. I can help you, yes, but I can't help you. It's a weird dichotomy. So when you are in a position where you're out there looking for help, there's help. There's individuals that know stuff that you probably don't, and they can help you and cut some form of your learning curve. But in the back of your mind, know that they can't help you. No one can help you, and it is you versus you always. There's places to go, there's people to meet, and there's areas where you can fill your knowledge a lot quicker. And I can help you from making a lot more mistakes, but I can't help you from missing all of the mistakes. Some of the mistakes you have to make, you're going to make. It's just how do you make that following? How do you react following it? I want to point out too, the saved trader. I don't know who this is. I don't know the name. I don't know if he's on the call right now or if he watches anything. I can't put the name to it. But this week he's been posting his progress of tape reading and studies and trading, and I clearly know that he is watching, whether he's in here or if he's watching the recordings. This call goes out every week to 200 plus people, and I wanted to applaud. I sat down and I watched all of these, and I don't know where you were prior. I'm not sure where or how long you are in your journey, but I watched these. Just know they go noticed, and keep on doing it. Just keep on doing this stuff. This is the type of stuff that you do for months and months and months, and each week, each day, you get better. So I wanted to give a little shout out to him because I didn't know the name, and he hasn't really even reached out to me. So it's more of just I see him and he tags obviously me and Henry, and he's been reading well. I can tell he's been watching because of just the way he's been reading, the quickness in which his reactionary times when he's watching these smaller time frames and things are formed, and he's watching and he's being patient with everything, and it was good. It was good seeing him this week. There was multiple times where he had tagged me on some stuff, so I applaud you, the Saved Trader. Keep going. I'm always in your corner, and as I am with all of y'all. But it makes me feel good because, the mentor, and I don't want to think of you, don't think of me as a mentor, but I read something earlier this week, and it said the mentor only wants the mentee to be better than him, right? The only thing I want out of this, for the most part, is for you guys to be better than me. I say that selflessly, but then there's a selfish part of me that says none of y'all will ever be better than me. That's just a competitor, right? You gotta have that mindset. But you never beat your mentor. The mentor just does his job. Think about that. And I think I've learned that, and I've kind of carried that with me from Michael and the way Michael is and the way he carries himself as the mentor, right? The mentor, you will never be better than the mentor. The mentor just did his or her job. I don't want anything from this. There's nothing that I'm trying. There's no catch here. I want you guys to do good. I want you guys to be good, and I know that there's value here. Even this guy. Now that I'm just looking at him, I don't really know who he is. He was on Spaces before, but he tags me and stuff too, and I kind of just follow it, and he has even done better over the past couple months. When he first came to me, the stuff he was sending me, I was like, you got a long ways to go. In the back of my head, you'll be watching this too. You could be on the calls and been watching the calls. You had a long ways to go, but where you've came in the past 2 months, you've done a lot for yourself. There's still so much more room to grow, but I see you tag me and stuff. I see you, and just keep up the good work. I want to see everyone succeed. This is such a sport where you don't need others around you to, you don't have to prey on their downfall or see them do bad. There's plenty of other people in the world. Now, granted, yes, you're out there trading trend lines and stock fees and RSIs. Yeah, I want to see you fail, 100%, because that's my money, right? You're my take profit. But with regards to the community, who's to say we all can't succeed? And unfortunately, we all won't. Not everyone will. Let me look at this. It's okay. Out of the 315,000 followers Michael has, y'all really think all 315 will be super successful? Unfortunately not. You want to know why? Because at some point you can't get help. Even Michael can't help you. There's going to be followers out of those 315,000 people that they just don't get that, and they can't handle themselves, and they can't mentally compose certain areas of their life in trading. But you can. Who's to say you can't? It's enough ranting, though. I know I've been on a tear of ranting. But yeah, doing a Twitter space tomorrow. It's nothing crazy. Just gonna be hopping on and chit-chatting. Probably have a couple motivational topics I'll go and kind of find and bring that up and maybe chit-chat some charts. See where the market opens up. See what the new week opening gap looks like. Other than that, Mr. Henry, do you got anything? I'm hungry. Now I get to go figure out what I'm going to do for lunch.
Thanks for joining me, man.
Thank you guys. I appreciate it. Wherever you guys are. Ismail, yes. I see you raise your hand.
Not trying to keep you guys here for longer.
You're good.
But I went into Dave's Twitter to look at the quarter theory. I think you touched about a week or 2 weeks ago.
Yeah.
And I was kind of just playing with it on the daily chart. As you as an experienced trader, you've been trading for 5-6 years, would you consider this till end of June the manipulation, and are you expecting that's the manipulation leg? And my second part of the question, I did not understand a true open. They talk about the true open is Tuesday on the week, the second quarter of the year. That I didn't really understand that. Even if you want to touch about it in the next week's video, it's fine. But
yeah, I will. I'll try to, because I know I still need to make a video about it. So hold on, I'm gonna write these down really quick. So true opens are kind of messing you up a little bit. What was the other one?
the other one, when I was looking at pretty much the daily chart is
June.
Exactly. The June is the second leg. So is this the manipulation leg of the year? Or are you expecting that?
I think it is on ES. I really do. It's just right now we have nothing that's going to guide us. I think we're just kind of now in our last little piece of overextension. And this is where I was talking about a couple of weeks ago. This is where you start to see CNBC, all those people say, like, you see 401ks up, everyone's stock market looks great. And that's where it gets a little tricky, because when everything looks great and you can see things at 52-week highs and all this stuff, that's when, you know, I get a phone call from my grandma saying, hey, should I buy this stock or this stock? The stock market looks great. And at that point, I kind of know we're probably going to go down, or at least relief a little bit. But yeah, I'll try to do a call or do like a little 30-minute call and record it and send it out to the group. And I'll touch quarter theory in general, but then I'll try to emphasize true opens, and I'll talk about June also. You can get that.
All right, thank you, man. You guys have a good weekend.
Yeah, you as well. You as well. Enjoy it. You know, if any of you guys celebrate Father's Day, happy Father's Day. If any of you guys are fathers, happy Father's Day. I know my father is on this call right now, so I will be with him tomorrow. I'll be spending Father's Day with him. I'm appreciative of him. Without him, I would not be here. So there's only so much I'm kind of at his will. So I do appreciate you guys. It's a fun time like always. Stay safe, trade safe always. I'll try to, maybe midday tomorrow I can get this recorded. Henry, if you want to hop on it, you can with me too. We can just knock out a quick little 30-minute recording and send it out to the group for quarter theory, because I know I still owe you guys that. And we live to fight another one. Just continue fighting the good fight, and you'll find a way around it. I promise.
Okay.
Talk to you guys later.